Hello, I'm Tom Gosling, Executive Fellow at the European Corporate Governance Institute, and I'm delighted to be joined today by Sam Lee, Professor of Finance at Santa Clara University and an ECGI research member. We're here to talk about Sam's recent paper, The Evolution of the Market for Corporate Control, which he's co-authored with Mike Burkart and Paul Voss. And this paper has just been awarded the 2025 Intesa San Paolo Finance Prize for the best paper in the ECGI Finance Working Paper Series. So Sam, first of all, congratulations. And secondly, thanks so much for taking the time to speak with me today.
Yeah, thank you, Tom. We're super excited about the prize and appreciate the interest in our research.
So to begin with, what motivated you and your co-authors to explore the market for corporate control? And what's the central question you're trying to answer?
So the market for corporate control changed a lot over time and looks quite different now from what it looked like in the 1980s, sort of the big bang for leveraged buyouts and hostile takeovers. And so one remarkable change over the years has been a rise of what's called takeover activism, which is where activist funds buy a stake in a public firm and then push for a sale of the firm or some of its assets. And so we found this interesting and started this project by thinking about how takeover activism fits into established takeover theory. And we figured, this might give us some clues as to the advantages of the strategy and why it has become so prevalent. So that's how we got started.
Okay. And personally, I'm really pleased the prize-winning paper was a theory paper because I think often theory papers aren't given enough attention in practitioner discourse. So can you explain for our listeners why theory papers are so important and what they bring to the study of questions like this one?
So why are theory papers important? I think that's a big question. I couldn't possibly try to get into all aspects of it here. But sort of off the top of my head, I think theory can be useful for practice in one of three ways. Could offer strategies for difficult practical problems or explanations for empirically observed phenomena. And this, I think, is where our paper comes in, or can give guidance for public policies to improve outcomes, right? So I think our paper fits in the second category. What we try to do is explain these observed changes that I just talked about. Is theory given enough attention in practitioner discourse? I don't know. Anyone like you, me, practitioners, or even empirical research, they all theorize about what they see, right? You read about empirical paper and everybody has some, oh, this is happening because. So there's always theory involved in any case. Now, theory papers, when people write papers about this, hopefully it involves a bit more rigor, a bit more effort. And I think that can pay off. Doesn't always, it can pay off in the sense that it can lead to sometimes something's very difficult to explain, or sometimes it can find explanations that are less easily perceived than alternative explanations. So to give you an example, the trends that we study, others have, suggested that the changes were driven by changes in law primarily. And so if you look at our paper, we propose something completely different, and we argue that this might be a natural evolution of the market for corporate control. And so in that sense, what can happen is that it changes. A good theory paper might change how people interpret and evaluate a phenomenon that they thought about differently otherwise, I think.
Well, I think that's a great explanation. And I think in this paper, the effort certainly paid off. And so let's get into what you studied and found. And you mentioned already that the paper was motivated by this shift in how control changes happen from hostile tender offers in the 80s to what you call takeover activism today. Can you just expand a little bit more what you mean by these two types of change of control?
Both of these pertain to situations where the incumbent management of a target firm is to some degree opposed to the change in control. So in a hostile tender offer, what happens is that someone makes an offer directly to target shareholders, circumvents incumbent management, says, I'm going to buy your shares. And then those shareholders individually decide whether they want to sell or not. And so if enough of them decide to sell their shares in response to that offer, the acquirer ends up gaining control. Often acquirers accumulate a minority block, a so-called toehold, prior to making a tender offer. So an example would be, say, 1985, Carl Icahn acquired a toehold in Phillips Petroleum and then made a tender offer. More recently, also acquired a stake in Southwest Gas Holdings in 2021, ran a shareholder campaign, and then again commenced a tender offer to buy the shares directly from shareholders. Now, in takeover activism, a minority blockholder, instead of making a tender offer to buy the company, him or herself, would pressure the incumbent management to get the company sold to an outside acquirer.
Mhm.
And so importantly, in this case, this minority blockholders on the sell side, not the buy side of the takeover, right? So to take Carl Icahn again, in 2007, he acquired a stake in BAE Systems and then pushed for a sale of the company, being on the sell side then, instead of making a tender offer himself and being on the buy side. Another example, 2017, Paul Singer acquired a stake in AkzoNobel and again pushed for sale of the company. Now, you hear this, you could certainly imagine situations where one or the other mode of control change prevails for one or the other reasons. I think that's not the point of our paper. I think the interesting point is that over the last three decades, there's been sort of a secular decline in hostile tender offers alongside a rise in takeover activism.
Mm.
So our interest was not piqued by the fact that there are different modes of control change, but rather that something has been driving a systematic shift over time, which I think was the interesting aspect of this.
So it turns out that information asymmetries and free rider problems are two important factors in your model that determine the nature of takeover activity. Can you just explain these factors?
Yeah, sure. Try to keep it intuitive. So an acquirer only needs half the shares, majority, to gain control, right? So in a tender offer, if you're a target shareholder contemplating whether to sell, you might be reluctant to sell shares for less than what you think the shares will be worth if the takeover succeeds. You're going to know if the rest of us, the shareholders, sell and I keep mine, I'm going to end up with something that's worth more than what's being paid on the takeover. So each of them wants to what's called hold out. It's like imagine a room full of people and you tell the people, if 50 of you leave the room, those that stay will get $100 each, right? So none will be eager to leave. And so that's the holdout problem. And in the room, they would become less reluctant to leave the room if those leaving the room are also offered a payment, right? And increasingly so if they're also offered something close to the $100 that those who stay will get. And by the same logic in a takeover setting, what this holdout problem does is that acquirer has to offer target shareholders a higher price to get them, quote unquote, to leave. Ideally, something closer to what those that retain their shares will receive. And the simple effect of this is that this makes takeovers more expensive for the acquirer. And so you can add asymmetric information on top of that. What that means is imagine that you're one of these shareholders, you're getting this offer, but you're not quite sure what the shares will actually be worth after the takeover, right? You have an idea, but you're not quite sure. And you presume the acquirer has a better idea. So now you get that price, and at any price, you're going to suspect, the acquirer thinks the post-takeover share value is going to be above this price. That's what makes it attractive. And so you expect that the bidders may be lowballing the offer. And you've add this suspicion on top of the free rider problem that makes you even less likely to go for, right? And so that forces the acquirer to increase the price even further, and in some cases even to overpay, right? And so this is actually a classic insight of a theory paper on blockholders and takeovers by Andrei Schleifer and Robert Vishny, and this was the core of the argument. And what this shows that this overpayment effect that's generated by free rider problem asymmetric information together can frustrate low to moderately valued takeovers, and that creates inefficiency in the market for corporate control.
So a key finding of your model, I think you've touched on this already actually, but that takeover activism improves efficiency in relation to both of these dimensions, and so brings this wider pool of potential takeover opportunities into play. Can you just kind of replay the rationale for that?
Right. So I just gave you the logic of the Schleifer-Vishny theory, and so our starting point was to ask, what if we brought takeover activism into this theory, right? And so if you bring takeover activism into this theory as an alternative to making a tender offer, what happens is that the blockholder can now choose to be on the sell side rather than the buy side of the control change, as I mentioned earlier. And so it turns out that this is a viable alternative for those who find making a tender offer too expensive because they have to overpay. And it makes it even preferable to those for whom a tender offer might not be very profitable, right? So instead of buying and overpaying, I have the option of instead facilitating a control change where I'm on the sell side. Now, even though being on the sell side exposes them to the other problem that the outside acquirer might be afraid of overpaying and offers a low price, right? But remember, the blockholders that are disinclined to make a tender offer are the ones that have low to moderate valuations. So that low price is not too far off target.
mm, mm,
right?
mm,
And so at any rate, even if the price is lower than ideal, capturing at least some takeover gains through the takeover activism transaction is preferable to having no takeover at all.
right.
So in any case, you prefer that. And so in sum, what we find is when we introduce takeover activism into this very classic Schleifer-Wishny theory, it leads to more takeover activity, and it also leads to partial replacement of tender offers
Mm,
by takeover activism.
mm. Yeah, so not only is this model of takeover activism, bringing more deals onto the table, but you also highlight that the optionality of the takeover activists to be on the buy side or the sell side is also important. Can you just explain why that is?
Right. So the first one is exactly what I just mentioned.
Mm,
So by giving this blockholder flexibility to choose what do I want to be on the buy side or the sell side of a control change, we allow for tender offers as well as takeover activism.
mm,
And as just pointed out, allowing for this choice has these aforementioned positive implications for efficiency because the low to moderately valued sort of transactions will opt for takeover activism. So that's the first benefit. And then there's the second, and that is if you look at takeover activism, it requires two players, right? It requires one, what we call a control-oriented investor on the inside, that's the block holder who ends up selling,
mhm,
and a control-oriented investor on the outside, that's the outside acquirer who's buying the firm, right? And so these two investors play complementary roles within that transaction. This matters um, when you start thinking about when control investors think about entering the market for control in the framework that we have, they can choose between two roles, and these two roles can end up being complementary. That is,
mm,
it increases both sides' profits.
mm,
By contrast, if you're fixated on a model where you say, oh, control-oriented investors they can only choose to be on the buy side in a takeover. They're always the acquirers. Well, in this case, the only interaction and takeovers that we get between them is competition, right?
right,
Which reduces each other's profits.
right.
And so complementarity versus competition, that's a very different type of
Mm,
interaction, which
mm.
has interesting implications.
Yeah, it's fascinating, and actually, what you then show in your model is that if you then look at this dynamically over time, the
Mm.
shift away from tender offers is actually
Mhm.
exactly what we should expect by
Yeah,
the result of economic forces. Just play through the intuition of that.
that's absolutely true. It has exactly with to do with the aforementioned this flexibility to choose roles.
Mm,
So our premise is that there's a control-oriented investment sector where people collect capital to make investments in firms to change corporate governance,
mm,
And our premise is that this grew over time. More
mhm,
capital came in, and fund managers entered this arena. And so as they grow, given this expansion, we ask, what roles do control-oriented investors choose
mhm,
when their number increases, right? So the role of being on the inside or the
mhm,
outside.
mhm,
And so when we play this out in the model, we find a very intuitive pattern. And this goes in three steps. So very early on, when the number is small, it's not attractive to enter the market as a potential outside acquirer. And the
mhm,
reason is
mhm,
the chances of suitable target firms being put in play are very small, right?
right,
Because
mhm,
there's not much going on at the moment.
mhm,
And instead, it's optimal to enter as a block holder because as a block holder, at least you have the option of directly making a tender offer,
mhm,
right? Which can be profitable for you.
mhm,
Whereas if you're an outsider, nobody puts a firm in play, it's not very profitable for you to make a takeover bid. And so as a result, when the market is very thin, people prefer the blockholder strategy, and
mhm,
direct takeover bids are the prevalent mode of control change, right?
mhm,
Most people are mostly on the inside. There are few
mhm,
people waiting on the outside, if you will. Now, when the market grows, once a sufficiently large number of these investors pursue these blockholder strategies, and so a lot of these targets are being sort of
mhm,
potentially put into play, it becomes attractive to enter as an outside acquirer with an outside acquirer strategy,
mhm,
right? Because now there are lots of these blockholders, and the potential pool of target firms that could be put into play
right,
increases. And so we call this the transformation phase. So once you're in that phase, investors enter in both roles
right,
and they start to exploit this complementarity between these two
mhm,
roles.
mhm,
And what happens as a result is that takeover activism goes up
mhm,
and gradually replaces tender offers, which
right,
begin to decline.
right,
And this continues until what we call the mature stage, where
mm,
both of these roles are sufficiently occupied
mm,
for takeover activism become the prevalent mode of control change.
mm,
So tender offers still occur, But in this stage, control-oriented investors are quite specialized. Block holders go in and primarily put targets in play for outside acquirers who wait for targets to be put in play. And there are some features of the modern market for corporate control that are well characterized by this. I think there's a simple, this sounds very complicated, but there's a very simple logic to this.
Mm.
The logic is that very early on, when the market is thin, the blockholder strategy dominates because it is more self-sufficient. You don't rely on anyone else.
Yeah.
But the market is quite inefficient. So in its most efficient form, the market would have control-oriented investors in both blockholder and outside acquirer roles to exploit these efficiency gains from takeover activism. And so the only thing that happens over time, when more people come in, the market just gradually moves towards the more efficient version of itself.
Right. And so linked to that, I mean, in this mature framework, you talk about a kind of symbiotic relationship really between activist shareholders and then, private equity or hedge fund buyers. So, yeah, what does that say about the role of these players in corporate governance?
Right. So there's this symbiotic relationship, which I call complementarity before.
Mm.
Right. So in this mature stage, what we would see is there's investors called activist hedge funds, and they benefit from the presence of private equity funds who stand by on the outside to be potential acquirers of the targets, and that makes activism much more attractive.
Mm.
And then conversely, private equity funds benefit from the presence of activist hedge funds that may unlock targets for them, right? Put them into play.
Mm-hmm.
And in practice, both sides are fully aware of this mutually beneficial relationship.
Right.
In fact, practitioners are the ones that coined these terms symbiosis or convergence between activists and private equity to describe it. This is not from academics, this is from practitioners.
Yeah.
I think Paul Singer said something to the effect that activism and private equity are a powerful combination. That's, I think, the dynamic that we see in many of these transactions today. Now, I think what this says about the role in corporate governance, in light of discussions people have had about this, I think one is that activism is not necessarily a substitute for takeovers, right? So sometimes you've heard the story. Sure, in some cases, the disciplinary changes induced by activism, they obviate the need for disciplinary takeover, right? If you use a medical analogy, activism is like an early stage treatment that makes a late stage surgery unnecessary. But really, within our framework, activism is not a substitute, but rather facilitator of takeovers. So here, activists are more like brokers in control changes. Or if you want to use the barbarians at the gate imagery, activists are like Trojan horses that help to unlock the targets from inside, right? Now, if you think about these respective roles in facilitating takeovers in the market for corporate control, there's another, I think, super interesting angle, a bit more abstract. But the way I think I've come to view the deeper point is that so activist funds and private equity funds, these are highly sophisticated, highly specialized intermediaries. And what they do in our framework is they help to overcome frictions that afflict the broader shareholder base, free rider problem, asymmetric information. And in a way, the essence of our theory is that an effective way to overcome these frictions in this market is for specialized funds to intermediate on both sides of the market, on the sell side and the buy side, as almost, if you will, representatives, right? Activist funds on the sell side, private equity funds on the buy side. And so I think this is an interesting perspective on how the modern market for corporate control and the role of these funds, that the problems that we describe come from a broad shareholder base. And now we have specialized intermediaries that go in on the sell side and on the buy side to overcome these frictions and make the market work better.
That's fascinating. And a reality is that, I mean, tender offers haven't disappeared entirely. Right. So where do they, what's the residual role that they play? And in your model, how do they kind of coexist with takeover activism?
I think the answer is multiple layers if we think from the perspective of our model. So first, inside our model, I think it's true that in what we call the mature stage, takeover activism is prevalent. And in fact, we have a model expansion where this is even more so the case, where control-oriented investors can differ in their ability to improve the value of a specific target. So when there's this heterogeneity, what happens is that the likelihood that some outside acquirer's valuation is higher than the one that's on the inside, right? The minority, of course, becomes larger, right? Because
mm,
there's more
mm,
heterogeneity. So that makes
mm,
takeover activism even more likely
mm,
to be the preferred choice as the
mm,
market chose. But even so, even in that case, with some probability, it's possible that no outside acquirer is superior and the
right.
minority block holder has a high valuation, in which event the tender offer will prevail even in the
Mm,
model.
mm, mm,
Then I think the other thing to clarify is that in our model, when we talk about the market at its stages, we treat the whole market of the corporate control as a monolithic entity. It's just
mm,
one market.
mm,
But in practice, investors have to specialize in certain industries or sectors. So the market for corporate control really has different segments, right? And each segment, the different segments can differ in their thickness. That is, the stages that we describe, the
I see.
different segments may go through these various stages at different points in time.
Yeah.
So whenever one particular market segment, perhaps involving, more innovative firms, right, is thinner than the others, that segment may feature less takeover activism and more tender offers, right? So it's not really just this one market.
Yeah.
Um,
Mm,
and then third, I think, this is very implicit, but clearly our paper assumes a financial system that has a market-based governance system, right, with
mm,
activist funds and
mm,
active
mm,
buyout market. And we know there are systems out there that are maybe not yet as well developed, but there are also alternative systems that they rely less on market governance as a principle and more on, say, concentrated ownership, family firms.
yeah.
And in such settings, clearly traditional takeover bids would remain more common,
Mm,
because
mm,
what we describe in our framework doesn't really fully
mm.
apply there.
But if you take a market, like the US, where that market-based kind of governance does largely apply,
Mhm.
is this sort of a dominance of takeover activism a sort of enduring equilibrium in that market that it will tend to over time, or does your model suggest future, different future trends that we might expect to see?
Yeah, so I mean, okay, so within our model, I mean, let's be modest, models are limited, right?
Mm,
Working off the presumption. So within a model, yes, it looks like that's the enduring equilibrium. Like,
mhm.
would I climb out on a branch and say, in the real world, this is the end all?
Yeah, yeah.
I know, I'm very cautious to make any
Mm,
claim of that
mm,
sort, right? I mean, some
mm,
caveats are contained in my answer to the previous questions, right?
yeah, yeah.
And then, I mean, there can certainly be changes that our model doesn't even speak to, or
Mm,
some that may invalidate some of the implicit premises that
mm,
underlie our
mm,
model, right?
mm, mm,
So I wouldn't get that far, but I say in the US, sort of given what we described, at least in the short to medium term, I'd expect that this convergence, that private equity and activism converge even more. There'll be
mm, mm,
tacit alliances between
mm,
players.
mm,
Some of the larger players may run both activist and PE funds simultaneously,
mm,
further connecting sort of
mhm,
potential buy and sell sides. Now,
mm,
our model suggests that these connections can be valuable to them clearly,
mm,
and they could have a bright side in terms of efficiency. At the same time, and there are some stories out there already, right, that the private value which those connections hold for these players could also have a dark side. We
right.
may see more of this in the future,
Yeah.
such as there being a fine line between alliances and insider
Mhm,
trading,
mhm,
anti-competitive practices.
mhm,
The
mhm.
longer run, I think perhaps even increasing concentration and common ownership within the control-oriented investment sector
Right.
itself. So, you're right, one could, venture and say, our take on how the market for corporate control is being organized should have ramifications for how the control-oriented investment sector itself will come to be organized, right? Right. And it might be interesting to see how the competitive landscape of activist funds and PE funds or ownership patterns across those types of funds evolve in the future, given that we say it's lucrative to be both on the buy and the sell side of these things, right? So those might be some interesting things that could go on. But this is all very speculative.
Well, Sam, thanks so much for taking the time to join us today. I think your paper offers a really fascinating insight into how the market for corporate control has evolved, is evolving, and why. And congratulations again on winning the Intesa Sanpaolo Finance Prize for Best ECGI Finance Working Paper. And thanks for a terrific conversation.
Thank you so much. Thanks for having me.